What up, everybody? Good morning. Getting ready for a brand new trading week. This is a huge week. We got big earnings all week. Let's see, we got Coca-Cola today. Tomorrow starts big tech, Microsoft, Google. You know how it goes. Let's see, Meta going. Just huge earnings week. So this is going to be an interesting way to play. If you guys have never traded earnings before, you understand exactly a few things. Somebody says, what's the idea on Tesla? Which part of Tesla? The stock, the car, the CEO? Which question? Should I go all in on Tesla? Is that what you're asking me? Market started in 4 minutes. I think market's still good. I think we're still going to support this range we've been in. The DD has been really long and strong. However, we have a new trading month that started today. So we're going to see what the monthly maps look like right out the door. Looking at our overnights, nothing bad. This is a completely rational day right in the middle, across the board. I like it. So we're good. Let me double check. Let's double check risk intervals to make sure everything looks the same still. Yes, it's still 31. Yeah, we're still good. Okay, good. VIX still 2.6. Yeah, okay. It's your morning upkeep that I do every morning. So check. We have triple B, and now again, VIX has been hovering up here, and I don't like this. Definitely earnings as well. You will interact with here and decide how the month's going to set out. So any bullishness that continues to go higher, maybe off of earnings, a little lower. So it's going to be really hard to get the market to rally leading up to earnings. We're probably going to maintain the range. I'm going to be looking for dips to scalp right back up to mean. It's probably going to drift up overnight, snap back down at earnings. We'll have to see all of it. So I'm going to look just for scalps again, not looking for breakout plays. Commitment of traders here. Where is... Oh, here it is. Yeah. So 2 minutes will be open. You can see that we are still in that mode where dealers are positive. You have actually net buyers. So it's interesting. So from about here to here, people are longing, and we are getting very strong long pressure against some shorting. So when these are fanning out like this, the market is very liquid, especially when dealers are positive. So it's an interesting thing to see that particular setup looks just like this as well, with dealers positive. This breakout just slowly is going to push its way higher. We're breaking out to higher highs. Everyone in our team believes that we're going to 45, 4,600 through earnings, and that's it. And then we're stopping. And next earnings quarter is going to be garbage. So we're going to turn around, trade right back down. Market still selling out pre-market. I wouldn't put too much stock in anything you see pre-market right now. This is a new options month, so every single thing we see today is going to be smoke and mirrors. The market's really going to take off and do, like, the minute the market opens, it's going to take off and start doing its thing. Yeah, are you able to look at crude with your stuff? Yeah, we can look at crude. Use the USO for a liquidity map for crude. Tesla and Netflix earnings change your mind about the earnings season being bullish? Yes, because those companies specifically are are amongst some that were very they're not in the stronger sectors. They don't have a real reason to. They're already overbloated to begin with. So I think the fact that they took a little harder isn't really something that I'm nervous about. I really think I would gauge the rest of earnings season off of not just major tech, but like I think they're all going to be completely different because we always used to lump Apple, Google, Meta all in the same place because the fangs would go up because of Kathy. But when you really think about it, they're all actually very different. Because you're talking about like the discretionary side to some things are going to affect sales. I think the companies with, like, I think Google will have a lot more resilience than a Microsoft would. I think an Amazon would be doing a lot better than Apple would. I think they're all going to be fairly different based on how they behaved relative to what their layoffs accomplished. So I don't think that's going to be a gauge or anything. I think all stocks, especially the most of the market cap, is fluxing net positive. We're seeing strength in consumer staples. We're seeing strength in utilities. So a lot of the sectors are really strong. Energy is looking strong. So the idea that we're going to get some strength there, I really like. Oh, let me go ahead and try to refresh my platform here. Is this my screen or no data is disconnected? Okay, hold on. Let me double check something real quick. Let me log out, log back in. I might have pushed. Oh, it is Sunday. I do need to log in. Hold on. Got to log back out and log back in. It's Monday. All right, let's go. My bad. Okay, let's look at BSU on the open on SPY. Let's go ahead and take a look on liquidity map. BSU has that monthly hedge pressure support and hedge pressure resistance at the top. So we're talking about. Okay, pulling back. Hold on 1 second. Oh, nice. So if we do trade down today, which is interesting to see this, I am looking for hedge pressure support here at DD90. Oh, wow. So if we do start selling off this week, this is interesting. So this is a pullback. If resilience is positive. Oh, wait, hold on. Let's analyze this. Resilience is positive. DD is positive. We are at the top of a bull zone. Oh, that's Apple. Never mind. I'm stupid. Don't listen to me. I forget everything except for the last minute. I'm thinking like that was like definitely not SPY. Just SPY having issues. Oh, yeah. Okay. What's going on with SPY there? Let me go check this. Okay, let me try some dates really quick. 19th, 24. Which is on my side. You're an 82.5 MHP. 412 HP. It's weird that's not showing up. Yeah, somehow SPY is. It has all the single dates though. Let's just take a look at. I was wondering. I was like, that looked kind of weird earlier. Okay, let's double check this. So we have bear zone, bull zone. So this is a mean reversion liquidity pocket. DD started off at 9, it's falling back to 8, so it's still going to be positive. Now, if we can use QQ as an example, bull zone is going to be favorable to hold. We have resiliences are positive, which means half gap and the upper close are support here. Sorry about the SPY being out. That's kind of odd. We have all the single dates. I'm just checking a couple of them. No issues here on VIX. VIX is looking nice and clean like you'd want it to. No resistances there. There's a good IWM. Let's check Russell. Same thing. So we have bull zone support, bull long up. So anything in here, Russell 177, Russell 176.5 to also support. I do like the idea that we are just kind of dipping and trading higher. I'm not gonna dive into anything right now. I'm gonna let the market pull back, being that we are going to earnings season. There's no incentive for us to believe that this does continue to just rally straight up. So I'm going to always just buy dips and bring it back to me, and I'd like to see things pull back here and go down. So keep out. Resilience is going to be the key for the pivoting around the half gap. Good morning. We don't have liquidity map on SPY bar. We have that. We don't have my volume output. Oh, sorry. Is my mic? Is it low now, or is it just me? Because I'm actually talking real quiet right now. I'm a little hoarse. Volume. Is it really low? Let me talk directly into the mic then. Okay, so taking a look at just some clues, letting Russell kind of bounce off of there would be fine. Earnings today. Okay, so let's take a look. Let's just kind of get back to some of the big tech. I was looking at Apple, look at Amazon. Unlimited bull long up at the top, so supporting any breakout side. If resilience stays positive, that looks pretty strong. At least for a push, the higher side. The upper band roll might be something we look for. Not really sure where the walls are on SPY. Things look pretty solid here. So now on the single date, let's just go ahead and let's do a monthly map real quick, because we'll have that. So some of the same, this is one thing we wanted to make sure we could see going into. Hold on. All right, guys. So running the monthly map, I was talking on Spaces. So the bear side deteriorating over the last next couple of weeks. You can't see the bears abandon their positions fast enough, and the bulls themselves are just slightly weakening. They're basically hanging in there. This bull side is really nice and steady. And of course, as we lead into Fed, you have the bear side and bull side both liquidating, but the bear side is rushing away faster because the slope is steeper than the bull side. Monthly map literally is the coolest thing we've ever made. I cannot lie. Projecting risk month in the future is just fantastic, or as far into the future as you can. But we really gauge it a month in the future until the next monthly, just to have like the clearest visibility. I don't like to project too far out because markets trade month to month. But as you can see, the QQQ completely deteriorating as well, and the bulls just becoming stronger in Qs. So you can see that the tech and telecom, healthcare, major sectors in the Nasdaq are becoming stronger relative to the S&P. So why don't you see the map letters on SPY? It looks like we have a data outage on SPY for some reason. I don't know what's going on, but we have daily walls on SPY, which is interesting. I go to single date. Somehow daily is tripping up the that liquidity map. We have a patch going in right now that's going to fix these drawing problems that we had last week. Like if I do single date and I go here and I pick like it's like we have data. Like we have all the data for some reason. It's like weird. So what we're going to do is we're going to do single date and take an estimate. This is a way to do it. For some reason, the drawing's being interrupted. It's not drawing anything. We do have the data. So let me run it this way. We'll do single date, 412, 411 bull side. So we're going to estimate SPY that way. So leave your walls on. It says no data received for walls, and it's really weird. So let's just assume 412 is going to be the support there for today, because that is today's on the support side. Res is positive, so we're supporting at half gap, supporting at here. So 412 support today, just really nice and strong, like all day long. I think we're fine up to upper DD band maybe. First index that taps the DD band, I think is going to be Nasdaq. Well, they're all kind of, yeah, Nasdaq's something that gets there closer. So how you guys doing? Hit that like button, everybody. Nice to meet you all. It's your first day here. Thanks for tuning in. I'm a little sluggish today, always getting my Monday started. I went to a party yesterday and then an after party, so I'm still a little full of tequila. So I'm sluggish today. When our buddies had a birthday. All right. Let's take a look at some tech this week. Okay, let's take a look at, we look at Apple. Let's look at Amazon. Belong up in Amazon. So things are looking nice and steady here. Your wife went to a concert last night and didn't get home until midnight. You're too old for all of that, Barb. If y'all live in Houston, I would have asked if that was Taylor Swift. This is Taylor Swift weekend. You know it's Taylor Swift weekend. When your city's traffic shuts down, there's police directing traffic, and you're like, what the hell? Why am I waiting an hour to get home? Oh, Taylor Swift's in town. All my friends, like half the people, all the friends that I have that are girls went to Taylor Swift. Half the guys I know, ironically, went to Taylor Swift. It's like such a huge event. I didn't know it was such a big deal. But everyone last night also went to Taylor Swift. And my Instagram is loaded up with Swifties or whatever. They have a name for their fans. What concert was it, Barb? Yeah, who's asking liquidity map letters for SPY? For some reason, there's a glitch in the drawing. It's not drawing anything, but we do have data. So to take a quick estimate, use 412 and 411 as your support. resistance for today, because those are today's single date. Was it Journey? Really? Wow. That's a cool, that's an epic concert if there was one. All right. Your niece is going to Taylor Swift twice in the summer, like back-to-back Taylor concerts. I did watch in Netflix. There was during COVID a bunch of, you know, when you watch Tiger King and you watch everything else, you run out of things to watch. There were a couple of concerts and documentaries that showed up. And there was one that was like it was just a Taylor Swift concert on Netflix, and it was just filmed. There's a Beyonce one too. Watch both of them just because you run out of things to watch. It was actually the concert. I don't know any of the song. I mean, I'm sure every song that Taylor Swift sings, I've heard before somewhere in some movie or some commercial or something. I mean, it literally all sounded familiar, but I don't know any of the songs. I don't actively have like any playlist or stuff on, but I was like, had it on in the background, and then it was like, oh yeah, I heard that song, and then watched a little bit of it, and like the production value of the concert was like insanely over the top cool. Like stage effects and presence and explosions, and I was like, dang, this is like a Kiss concert, and like it was just Taylor Swift with their guitar, and it's like fire behind her and stuff. I was like, dang, that's pretty. I like concerts that go over the top. That's the only thing that allows me to want to stomach a Coldplay concert, because I'm not at all a Coldplay fan. It's Coldplay is like the band that everyone has on their playlist, but they don't like actively go out of their way to love them. You don't hate it, it's too soft for me. It's like soft pop rock. But their concerts are like one of the best concerts to go to. It's just like a fun event. They do all kind of crazy cool stuff with the crowd participation. It's kind of fun. So Peep Airbnb, let's take a look. Hold on. Any way to estimate hedge pressure for SPY? Right now, I would put them close to QQQ at the start of the month. So I'd say SPY, I would say it's probably close to 412, 411-ish, probably somewhere in here. So the best way to think about it, DD, 412 on single date, that's the closest we have. So in single date, we have a bull zone at 412. So I think that QQQ and SPY are going to relatively be similar to each other. So you can assume that SPY is kind of the same thing. I'm looking for both the support right there. Yeah, for some reason, we're investigating the drawing on this. For some reason, it's not populating. There's some kind of glitch, because I'm looking at SPY, all the single dates, like we have data for all of them. So no reason, something hiccuped, and it's not drawing. So he's going to look it up. I'm having him go to the database to give us that number, just really quick. Yeah, everything looks really great today. Let's flip on the scanner. Illiquidity pockets. Let's go for like MHP breakups. Let's see if anything. Now, I'm sorry, HP breakups. We're into a new trading month, so we're gonna look for Kroger and Microsoft of all things. Okay, let's go. So Microsoft in an illiquidity pocket, pushing out bear long up. So hedge pressure break back up to bear zone. There's going to be resistance here. So I'm curious to see how this does play out, because there is the index products are kind of moving through here. So Microsoft hitting a top right there. Let's look at Tesla. So if you guys haven't checked out Rocket Scooter and you need a link to get into the $35 trial, let me know. I'll put in, type in chat, throw a rocket emoji in chat if you need a link to the extended trial. Nothing here, nothing here, nothing here. Oh, shoot, I didn't catch up on some messages here. All right. I am liking what I see. Let me double check QQQ really quick. Resilience is strong. Everything is nice. Like everything here is nice and tidy. I do like what I see. Here's that resistance now that Microsoft has hit a resistance there. I gotta get there. Let me get a couple of you guys. I have about 15 messages I gotta catch up on. Oh, probably. 1 second. A couple more people messaging me really quick. All right, so somebody's asking about the deal. Okay, so here's how it goes on your pop-ups and the deals and everything. Hold on. So if you get a deal, right, or a pop-up on your dashboard about Rocket Scooter, if you sign up for any of the deals, they take place immediately. And so the longer you wait to join or leave the trial, the less cool the deal is. So the deal will be less. I don't know if, like all data looks like I want to take a trade. I'm just being a little cautious today, because I don't have all the full data on SPY I need. So what I'm saying is people are asking if you sign up, does that take place at the end of the trial? And the answer is no. If you sign up for any of the deals that the website gives you, they take place immediately. But the whole point is that the sooner the deal, the better it is. So you lock in whatever it is for life. And if you see like a pop-up on your screen that's like, try out this deal, it'll never get better for you. That'll be the best deal you'll ever see, the first one you do see. It gets less cool as time goes by. So just keep that in mind. But it's a really kick-ass deal. So hold on. For each person, you'll see. Looks pretty good. Resilience positive, supporting here. Bull zone positive, supporting there. I mean, it doesn't look terrible. Let's find, let me take a little resistances here. I'm kind of looking at monthly walls, gap fills, anything. Let me get some. Clone this really quick. The gap has still not been filled, huh? This one from way back here. I like the way things look pretty good. So QQQ from here to there. DD band is probably one of the Travis is like, you do not listen to Coldplay. Read you guys are saying here. Beep Airbnb. Quick. Did I already look at this? Oh yeah, we already did. BLD, just trading in here. There's really no resistance to trade off of. Taylor Swift is entertaining content you're into. Right? It seemed pretty entertaining when I saw. Let's see, we can get upper DD band, 4180 and some change. Nothing is looking scary today. Everything's looking steady. I think I'm going to watch resilience and see what happens if it does. You got a little bit of selling pressure showing up in resilience here. Just want to see what's going on when it comes to half gap. SPY is just holding. I mean, holding like a champ. Ideally, being at earnings, I'm gonna think that the market's going to not move in a straight line. I think we're gonna see waves. So I'd like to see what happens when SPY interacts with here. See if resilience holds support. And then I'll take a thought from there and see if I want to do anything long from here. Top DD bands rational across the board. That top DD band trade might be something we do trade. Now it doesn't guarantee you go to the upper band, just as you want to go to the upper band for the lower band. So keep an eyeball on that one. Let's take a look at Qs really quick, because that was the one that was like right on the edge here. Where's Q hedge pressure at? Okay. Nice and tidy here. Let's keep a look at making sure the market stays stable. With all rational stuff, things are looking pretty solid here. So let's see what happens at hedge pressure right now for Qs. Take a look at this. People are going to sell pre-earnings. Nasdaq resilience is pushing closer to 0. Mean reversions are always random, so from here to the middle, always going to be random anyway. So this is a clue of what we're going to see. Make sure, like, you know, this week you understand that leading into earnings, you're going to be paying extra premiums going into anything that IV's building up for. So anything that has an earnings report, you know, long in calls and long in puts for breakout, you're going to lose a lot. If you don't break those expected ranges, your IV's going to crush your premium. So be careful trying to long options short term through earnings. Keep that in mind. The Woodstock was crazy, Uncle Bo. Oh, the 99. The one with Green Day. I remember all that. I didn't go, but I always watched. Tomorrowland Atlanta was the best festival we've been to. I know, I wish they wouldn't have canceled that. We're going to go to Tomorrowland, though, either next year or the year after. And you got to get them pretty early. We were talking about making a little trip to hit that up. I think everything looking kind of tidy today. Not worried about this market at all. Nothing yet. Remember, for these funded account things, I want to make sure I get a good trade off of something to something that makes sense. Resilience is good. Things are looking good here. QQQ is supporting mean reversions, always random though. So the market's coin flip from here, and obviously keep an eye on any breaking of hedge pressure. Oh, there it is. You get it. You push it through. Oh, there we go. We push it through. There it is. There it is, baby. All right. I mean, bull long up, hedge pressure, resilience, positive, DD strong. All right, I like what I see. Ghost them at this. Just keep an eyeball here as well. All right, reloaded. Okay, there it is. There's the resilience. Okay. All right, let's watch this test here. Keep an eyeball on Nasdaq. So be careful today. Nasdaq did have a hedge pressure break. Right out the door. So let's make sure 316 holds. QQQ is probably the worst of the two. That's my phone. Oh, my alarms are going off. Time to wake up, Matt. So let's see what you guys are asking. Tomorrow's good to spy. Johnny Walker blue today. That's right, Waylon. That's right. Blue, baby. What's this monthly map you hear about? Click this button called monthly map. Projects risk a month out. So the monthly map, there's a way to read it. We're gonna teach courses on that this week. So it shows the bull side is strengthening over the next 5 days. The bear side is weakening. So going into earnings, people are positioning more bullish and less bearish. Means less bearish means people are getting out of bear trades. More bullish means people are getting longer, deeper, lower lows, longing lower. So bear side weakening, bull side strengthening. QQQ. SPY similar. The bear side is just literally melting. Put like a couple micros on the table here. Is this good? Me. Everything's solid here. So for monthly map, refresh SPY. It's a little. We just had that. We pushed SPY through the server just a second ago. So you guys hit refresh on your platform. Just my only fear is pre-earnings. It's gonna be hard to think that it does. Break out or move really fast today. But the bull side, essentially for SPY, staying put. It's not necessarily strengthening, but it's not weakening at all. Strengthening the next 2 days, and then the bear side again is just deteriorating. So essentially, SPY is set up for a massive short squeeze. Nasdaq is set up for people that actually are trying to go long. So it looks like tech is going to be strong in earnings reports. So I think that's interesting to see that. So you can read that with the monthly map. We'll teach you guys how to read it. So yeah, let's put some micros on the table. Micro, we're good. Nothing crazy. Again, it's a bull long up. Signs are good. I like what I see. Bull long up to upper DD band could be a trade today. Right off a head twister. Nice tight stop. We lose it. It's not a hard trade at all. It's a very pretty textbook today. I do like it. Upper S&P target about 4185. Nasdaq 13190. All right, I like it. Can you basically discuss your thoughts on 0DTE VIX? I made a tweet about it yesterday, and the impact it has to volatility now has zero impact. It will have zero impact on the market. It's going to just be another. Let me think about how I'm going to say this. Will it cause additional market movement as people are going to now be using the 0DTE VIX, possibly if it is a tradable instrument? I don't know if there's a tradable instrument with it, other than there just being an index with it. If there's just an index, zero effect on the market. It just reads things differently. There are people that already have a 0-day VIX. Here's the thing. That's just one that the CBOE made, right? There are everyone on planet Earth who's a fund, firm, whatever, has their own VIX. There's no way that this is a new thing to the industry. The industry, they create their own tools, right? So instruments like that, or equations like that, to analyze the volatility of 0-day options, every single hedge fund and investment make out there has their own risk group that has a tool that does capture those 0-day risk. So the fact that retail has one now, that means you're not a quant firm. You don't have to go out and create your own. It's not hard to create a VIX, right? The equation's very easy to understand. You can create a VIX that looks at any options in any window. They're giving you that because we already had this talk before, is that the VIX has a 30-day, it's trying to capture a 30-day window of risk, and also simultaneously a monthly options expiration between now and that 30 days forward. So anytime you're looking forward 30 days, there should be a monthly expiration between now and then. And that VIX was designed to capture people that are long or short the market with options on monthly expiration. So the idea is that the three major institutions were the ones that played the big positions they had with insurance on the monthlies. So they would basically, if you had a stock you wanted to get dividends on, you'd hold the stock for a quarter, or hold it after you get on the ex-dividend date, and then you needed to hold it, or your portfolio that you managed, you held stock for years at a time or months at a time, whatever you did, and you just trimmed the position, like see some mutual fund or some ETF or something. You just held a stock. So every month you buy insurance on that stock if you believed it was going to come down. The institutions would typically buy monthlies because I mean, that's the only reason you would spend a little bit extra money, just so you don't have to manage it so actively. And then you would like hedge smaller amounts with the weeklies. And if you adjust your position, maybe you had 10 million shares of a stock, and then you bought 100,000 this day, sold 100,000 that day, you just trimmed it or balanced it. And you bought, weekly options off the trim and balance, but you have your major bulk of your position hedged in monthlies. The VIX was designed to capture that big bulk of people escaping monthly positions. So the big firms, if you hold 10 million shares and you're liquidating rapid, like millions at a time, or over short periods of time, then your 30-day outlook is volatile because you're going to be escaping those options as well that you were also in hedging. So the original VIX was designed, and the original VIX looks at days 23 through 37, I believe is what it is, spanning that. So it looks at options that expire 23 days from now and 37 days from now, and you get that window around the 30. What happens now is that a lot of people are hedging with zero date expiration or near-term expiration options like the next Friday. And a lot of money is fluxing into those options. And why is that? It's because it's cheaper to hedge. People at Wall Street has found out. Well, starting whatever. People ask like, why would the CME Group issue more options that expire Monday and then Tuesday, then Wednesday, then Thursday? Why would that be a thing that they do? And it's because if you add more tables to the casino makes more money. It's just the law of the land. You give people more gambling instruments, more people are going to trade. More trades mean more commissions up the ladder. Is strictly a money thing. That's the only reason to have more options to trade. Giving people more flexibility means people will micromanage their positions better. Let me say, well, as a whole, trade more. And as a whole, lose more, because the game is designed to squeeze people out. The more people trade, the more money goes up the ladder. It is a money thing. The only reason to add these things is to scrape more money from people. And that's it. And it's not a terrible thing to have those 0 days. But what happened is that if you have a position, a naked long position, right now in SPY, a massive position you need to hedge, what if you just ran out and bought 412 puts for today's expiration, only if 412 was crossed, right at the money? Because even at the money 0 day puts are much cheaper than out of the money 30-day puts. Slightly lower. Because the premium's mostly decayed. So you don't have to like tie up money. People realize this. You don't have to tie up lots of money to hedge positions. We're starting to see rapidly. It's not just speculative trading. Now I know it's been popular for speculative, retail traders, but mostly it's for cheap hedging. Same reason you see a lot of hedging takes place in futures. You don't have to lock up. The thing with being a firm or a fund, you'll realize that their goal is not to lock up money for a long period of time. You need maneuverability. So the idea that you can have relative naked-ish position or mildly hedged position, and you can rush at the last minute and buy some really cheap 0 day options just to like throw a parachute on your back as you're falling out of the plane. It's basically what it is. It's really helpful to the industry, but what it does is people are piling up their hedging so quickly up near front, and then the real VIX doesn't reflect that. But I mean, how many traders out there even use the VIX day to day to trade daily? I mean, the VIX is such a noisy thing and doesn't correlate with the S&P's direction. It's really hard it just correlates with volatility, right? And that volatility may not be realized up front, even though we use the VIX to show that the market will pivot and respond to it. What will the 0 day VIX reflect as far as widening of the market? So if that VIX goes up and the 30-day VIX stays lower, I think relatively they're going to be offset. So the 0 day VIX will always be slightly higher, I bet, because the volatility on those shorter term options will always be higher, likely. But will it move down when the regular VIX moves down? Is the risks more like spread out that way? Like it'd be weird to see one go up and one go down, but I don't know. I haven't watched it in action. It'd be cool to see though. Do I think it'll have impact on volatility in the market? I don't think it'll have any impact other than handing institutions data they already have. Do I have an ETA on my implementing the futures that we talked about? I'm in talks right now to get that going. So we have two major projects that we're trying to work on simultaneously, and then that's what's taking a little bit of time. But these projects are going to be massive changes to our company. So just when I say that's the very next thing we're working on. Nothing else is coming out before that. Half gap is right at golden pocket. I'm mad. Is there a video about those gray boxes? Yes, Marie. Hold on one second. My phone glitched here. Hold on.
Microsoft and Google are reporting tomorrow.
All right, so I'm good. Just a small position, nothing crazy. So you guys know the 10K to 100K challenge, not going pretty nice. I did just hit the 60K mark, so that's to celebrate. I did also long in that account as well. Again, there's no signs of selling. Hedge pressure support here, going up to that. He's looking really solid today. Man, I need to. I'm thinking about getting LASIK. I love wearing glasses. I've been told I look sexy in glasses. However, I hate always like cleaning my glasses. I feel like that's minutes of my life I'll never get back. How are they called? Is there a video about the gray boxes? These are called liquidity pockets right here. And illiquidity pockets, we'll talk about the gray boxes. There's also the liquidity map videos in the big three, which is in the entry section of the training. We'll also talk about the bull zone and bear zone. If you're talking about the gray boxes on monthly map, it's called monthly maps. It's in one of the maybe 5, 6, or 7 in the order. If you go look at the area of the Discord that has the rocket scooter training, you'll see those. What's up? Why are those 0-day options cheaper then? Okay, so the way that options work, if you were to hold, or the options pricing works, If you were to hold, no, I'll say, let me start over by saying this. Theta is the highest at the money. Okay, so theta is how much premium your option loses. Realize it marks to the price in real time. Theta is a loss, and the theta that you're given by your platform or will typically be represented as theta per day, which is not real-time theta, but that's about the estimated loss of premium for the day. It's the highest at the money. So if you have an option, like right now, if I were to go buy 412, and I say right now 413 because I'm at the money calls, and I buy them for today or a week from today or a month from today, you'll see that the further out in time, options are just more expensive in general because of time. The time to expiration allows there more flexibility in the probability of you hitting them and striking in the money. So at the money, the decay is the fastest. So if I bought, hold on. I'm in spaces real quick, guys. Oh yeah, like I said this morning, everything's long and strong. You know me, I don't wake up and try to guess or fade anything. I take the data that is. DD number, 77% of the market cap of the S&P opening on the bull side, SPY holding its bull side, 412. We did break through hedge pressure to the top, which is a gamma shift from negative to positive gamma on these weekly expiring options. And so as we're running into earnings, two really interesting things to see. The actual stronger of all the indices today, the NASDAQ actually positions over the next week much better and much more bullish than the SPY, which is hinting at a bullish appetite for these tech stocks we're going to have. We run a thing called monthly map. So number one is SPY's pushing higher. I did get in a long trade this morning in the futures, so I'm looking pretty good on that. But it's mostly because everything looks good. And we have a feature called monthly map that can project into the future where the risk of options are on those expiring days. So we're looking at that. And you'll see that in NASDAQ alone in the next week, the bull side just rapidly strengthens and the bear side deteriorates. SPY's kind of holding the fort, but the bear side also deteriorating. So for whatever reason, people are leaving and exiting these bear trades. I think they know that while earnings going to cycle back around next season and look really bad, while this season's going to look good because now right now is when we're trimming essential employees and production's down, and you're going to see that reflected next earnings. And Wall Street was believing that, trying to get steps ahead of that, but the squeeze is just too strong, and people were building up short positions for the longer haul. We're getting squeezed in the meantime. So what I think is, we're still going to push higher. Nasdaq's going to lead the way, and I think that despite every earnings report that comes out, the guidance is going to look really kind of terrible for the next couple of, I would say quarters to years. We're in a real bear market, but positionally, people are going to get squeezed before it comes down, and all data points up. So I wake up every day, look at the data. Today, everything's long and strong. There's no scary points. There's no sign of anything fading. And so I'm just liking all this data. And it just shows, the reason I think is behaving this way is that everybody took the obvious bet, rate hikes and QT and all that stuff, and everyone was short, betting on a market to collapse. And then just, there have been genuine buyers. The commitment of traders across the board, so a report that the CFTC puts out is showing a net long accumulation in all futures products, at least index products. So people are buying at this time. For whatever reason they are buying, and probably because the treasury markets are getting hammered and there's just no gain in fixed income at this point, I think, and so everyone's still taking the risk on equities. Russell's looking strong as well. So even small caps the last week have been getting a little bit of forward traction as well, which was actually a surprise to me, because I thought small cap would be a little weaker going into major earnings now. Would obviously give it a little volatility, but people are very risk on for the Russell. For traders here probably agree it's been unusually strong for the last 2 or 3 weeks. And to me, that just shows Wall Street has an appetite for equities, and it's typically the battle between what's better, fixed income or equities. And if we might be experiencing a second wave of inflation due to not going into that talk, but a smaller second wave of inflation, not from the same reasons as the first one, then inflation is obviously a nail in the coffin for fixed income, and maybe just equities doesn't seem as bad of a bet to park your money to fight inflation when you do have really good things like energy, materials going up. So it's interesting to see Wall Street shift its thoughts to that. But like I said, everything's strong. Nothing's looking weak for me today. Loving it. Nothing, man. That QQQ. Let's look at IWM. Actually, speaking of that, I was talking on space a little bit ago. pop me up to talk about these indices on the spaces about the SPY and QQQ. So yeah, a little bit of info here on that. Trading any minis in your 10K account? Oh yeah, it's all minis at this point. So absolutely. Let's do monthly map. What's going on monthly map? There it is. So there's a little, let me let him know of the glitch on monthly map where you have to play at the axis. Because I know he knows that. Get a smile. LASIK has a larger flap. Get a smile. Oh, is that what it is? Smile? Is that what you call it? I took intellectual sexy and glasses. Regular sexy without. Regular sexy without. I know, man. I know the feeling. I look cute without glasses. I look tolerable with glasses. What are the marks that you had at 415 and 408? Oh, those are going to be your DD bands, and this is a manual thing. One of the things we teach in our classes, and part of me, I have lost my voice. I was at a party yesterday. Barb is like, I look sexy all the time, okay? LASIK made your eyes dry all the time for the first couple years. Yeah. I'm gonna tell you, I just hate plus my right ear is slightly higher than my left ear, so to get them to perfectly line up with my face is great. But the first time I leave my glasses in the car, I feel like the heat warps the plastic a little bit, and then they never fit right again. Smile doesn't do that? All right, I'll check out Smile. I'm gonna call this plastic surgery year. I'm gonna get my eyeballs done. I might go get my teeth done. Like a, what do they call them? What's the thing? Veneers. My buddy's a veneer dentist. I might have aged out for LASIK. Damn it. Well, they know. I'm old. I'm old AF compared to all you kiddos. My age begins with a 4. I'm slightly over 40. Just barely. Is it too old? I'm an old fart. Alexander, age is a number. Shut up, Matt. You're young. That's right. I feel young at heart. It's how young I feel at heart. Let's look at Instagram. Let me tell you some funny story. So, all of my friends are. Let me show you. I went to a party yesterday. You don't follow me on Instagram? You should follow me on Instagram. Let me my. show you all some pictures. Market's slowing off a little bit. Watch out for this hedge pressure break here. Keep an eye out. Bull side, hopefully support. DD81 looking pretty solid there. Not too terrible of a thing. I think I'm going to add some more at the support 412. Is this watermelon sugar? Oh, that's dope. I just realized I'm listening to can you guys hear the lo-fi? What's up? Anyone smelling a slow ladder up trend? Yeah, 100%. Can you see any info on long-term LASIK complication? Yeah, send me anything that you know about all that stuff. Did y'all hear the lo-fi music in the background? That's watermelon sugar. It's kind of that's a jam right there. Bringing back all kind of feels from COVID, right? That was like the song you heard every minute during COVID. So I remember like living my whole life outside at my pool, eating crawfish, and this all you heard was this song like everywhere you go. Breathe me out. Believe it or not, oh shit. This is again. Dang it. I keep fumbling here. Pushing the wrong button. Oh, keep an eyeball here. Possible hedge break. There's that 412. Be careful. Watch out today for any additional weird selling pressure. There's 412. Let's see. We have any. Maybe make sure I'm not overlooking something too. Let me go really quick. Anything today coming out? Nothing too crazy. But this is a really crazy candle. Nothing here. Nothing here. No. Be careful on the hedge break. And solid. I didn't put too much risk on the table here. Am I currently short-sighted? Talking about my what do you call it? My vision? Now I have like astigmatism. Yeah, that's what I need is like glasses for reading and staring at small flashing lights and numbers on my trading platform. So Res is still hanging in there a little bit. I think S&P now there's a possible scalp side inside of here. So interesting to see if we do take a next stab. Anytime you break through hedge and it doesn't work, I just be cautious here. If I scalp, it's going to be back up to here and I'll call it. Question is, do I want to add a little risk to that? I'm not really sure yet. Again, I don't, in this account, I don't put a lot on the table. Use a magnifying glass. Hey man, whatever works, right? So 84, the bull side's still likely to hold today. Be careful, mean reversion's gonna be a hole in the middle. So looks like that's interesting selling pressure. Let me see if there's anything. Let's go through the scanner and let's look for monthly hedge. Have got breaks to downside. Let me see which stocks we had. Amazon, that's one of the ones that lost. Meta. So we do have support in some of the bigger stocks that move. So Amazon's right there. Just see which bigger stocks that push through. AA, IBM, airlines again. Airlines have been kind of pushing the same direction for a couple of days. We've been seeing them show up on these half gap breaks, so they're not finding strength. Nike. Okay, so it looks like we have just major tech is starting to lead the way now. Google just pushed through. That's what we're seeing. Okay. Let's keep an eye out for, I'm going to keep Google here and Amazon handy just because we're going to see what's going on in these major tech. So clearly want to see some support here. Ooh, this is just getting some nasty selling. Pre-earnings, I think, selling for these couple stocks. This might be a pretty big sell-off day if it does continue to go. So here's our supports there. So do we see support here? The resilience now negative. Let's be careful here, right? So upside potential is limited at this point. We're going to see, check an eye on monthly hedges right here. Google, Amazon. I just put, like I said, 5 micros, nothing big. There's that bounce point if there is one. Looks like that is where we are. I think we're going to get maybe enough to dig out. Let's put 5 more. And I'll just dig out of this one. Like, what was a bounce point? Some of the bigger guys are bringing. So what I do is I like to go in and see what it is that's causing the move. I want to see S&P hold in bull side, so I have a hard time believing these things are collapsing. Like bigger stocks, Apple, Google, right before earnings. So this is looking pretty okay. Resilience is negative though, so my upside is limited. Let's get ready to go, baby. All right, let's go. Mean reversion back to here. Upside is limited to there, so we'll probably get 1 point out of this, if anything, but this would be very rare to go from bear side to bull side against DD like this. So try to scrape out a win from this if I can. Seems like I should have cut this. No, that's not how That's not how that works. Stop loss is always 1 strike below any hedge pressure pivot or bull side pivot. So 1 strike below would be 411.5 to stop out, which would be right here. So I always take a stab. I'll show you. I take a stab here, like at the open if we're above, and I'll add to it. Even if it's a small trade like this that I know is going to end up here, I know the range is small. So this was discretionary. Like I don't have, I don't need to stop to get back in. I calculate and understand that I'm okay with this drawdown. That's why I got in the size of the position. Initially, I had just in case I'd fall there. So I can double down like there. So I long here. I just longed again there. My cost basis is here. So if we go to there, I'm at least breaking even and making something. And that's kind of how I set that up. We're outside the bull zone. Well, the idea is that I'm framing one position. Irrational markets will have overshoot. So my stop is always 1 strike below. So my idea to stop would be below here normally, but now that we're in mean reversion, I already have that rule that DD breaks in mean reversion to the bull side. Hold on 1 second. Anytime that we push through really rapidly to have any rapid sell-off and resilience and rocket scooter goes negative, the first thing I do is I load up the scanner and I go look at half gap breakdown. It's a condition we have that looks for stocks that have fallen through half gap and now filling the gap to the downside. Google, Amazon, we had some big tech come through and that happened. So immediately what I do is I load those up on liquidity maps and I see that Apple just fell to test its own Google fell to test its own hedge pressure. Amazon fell the same way. So there's some support there. And now, like as I'm talking, there's green. I just doubled down on my long because the stocks that made the index pull back, it's just pre-earnings selling, and I don't expect it to collapse through here as long as those hold. So now I'm actually eyeballing Google, Amazon, some of the airlines as well, Coca-Cola, Snap, Meta. Those are all the ones that have created this downside move. So I can have this on our scanner and I can watch which stocks are the ones that are causing the downside move. And when you see it's major tech, pre-earnings selling, I don't think that it's a trend that's causing, but it did break through hedge pressure. So a little cautious there at that 412.5 level being lost, but I still think we hold 412, like you said. I mean, it's very key that DD number is nice and strong. 83% now, market cap still flexing bullish. So it's to bet that we do stay at the 412 side on SPY. So I'm not really too worried about thinking the market's going to find a direction, especially today. I think that we're going to, like somebody in my stream called it, ladder trend up. You're going to kind of like go up one rung at a time, and the market's still going to probably still push bullish, I think. I don't know, what do you guys think? If it keeps going, where does one get out? 1 strike below my entry point. The rule's always the same. So if my my pivot. So if my pivot is here, 1 strike below is here. Now I can slightly give a little fat on that on a greater principle, which is the greater principle is we're going to end up here. So inside of mean reversion, I'm always 100% out there. So right now my plan is to be 100% out here now. It's a special condition that in mean reversion, there's a rule that takes over that DD tie breaks mean reversion, which is the middle of a liquidity pocket. Okay. So mean reversion, liquidity pocket. Now we are irrational, so you have to be careful with that. But even so, if this bear zone was like way down here, I wouldn't be comfortable losing 30 points, 40 points. But the fact that it's only another 5 points away, I'm bending my stop a little bit more. So I took a very small position here. I took another position here, and I'm going to take one more position right here as long as ZD still is positive. So I long right on the edge. So I did like 5 micros. I did 5 more. I'm going to put in maybe 5 more right on the edge here to really get this trade to there, and then I'm going to X out of the whole thing and call it a day. If I get this, I'll X there. If I get this, I'll X there. And that's how that works. I stream every day? Yeah, I stream every day. So I would get out fully on being long in the bear zone. Makes no sense. Even though DD is still positive, this is hinting that SPY will like to at least approach and touch bull side today. So I had to be a little custom on this particular trade plan because while that is creating an irrational side, I don't enter new positions on hedge breaks that often unless I have very strong conviction. With the resilience being negative, we are limited to here anyways. So it's really, I need to give myself some flexibility to trade somewhere down in here to at least return to test that 412 level. Right? This trade is multiple entries. Yes. Every day trade you make should always be multiple entries. If you're trying to scalp up and scalp down and scalp up and scalp down, you won't ever be profitable. Nobody trades like that. It's impossible. So you have to take your best conviction and pick your best trade and trade from somewhere to somewhere for a reason. I usually do like one trade a day. So I'm not so strict on getting out if my conviction's still strong. My conviction is this time, instead of, okay, let me get out of the way, it is, let me double down, add to my position, and get out here instead. So as a day trader, as you get better, what you have to do is use discretion to always decide, do I take another entry or do I get out? And it's risk and reward the whole time. So now that the second 5 I put on is risk and reward from here, it's reward to there, slightly above 1, and the risk is right here. So like, look, it's already paying off. So the idea is that I never flip-flop. That's one thing you'll never see me do. I'll never long and then short. I think anyone that does that is dooming themselves to inefficient trading and losing a lot and having a lot of emotional baggage. If you flip long, flip short, flip long, nobody does that. So if my bias is long, I'm going to decide where my long position is and should I take a second entry. It's not always like that, but today it was possible. Normally I will stop if you lose bull side and DD doesn't support it. DD supports this move you're seeing right here. You guys see how it hit the middle and it's walking right back up to that. This is textbook. Now, while irrational, you have to be very careful because the market's irrational, but we have noticed is that DD has survived irrational markets. It's the only rule that seems to be very resilient because this is, like I said, DD is a newer thing to our community. And of course, usually when you're irrational, we don't use liquidity maps anymore. Resilience can have delayed effects, but DD still has that pull because the strength of the S&P to tether to the stocks is so strong, and we see that every day. Yeah, bear trap, somebody's saying. It's always one strike distance from a major pivot. So the major pivot today was the S&P hedge pressure. And what I do is I have to build a case to be a little, you missed a couple pieces. If you're trading S&P and you're just looking at S&P, you're doing it wrong as well. So I have to look at NASDAQ, Russell, and I have to find which stocks caused the S&P move. And they had support there as well. So this half gap breakdown, because that's exactly what the S&P did, I had to find out which stocks made that happen. And I come through here and sort by half gap breakdown, and I'm going to find and see if those stocks have resistance. If Amazon didn't have resistance right here, I wouldn't have made that second long. So I'm like, okay, Amazon has a bounce point. Okay, it's worth a shot. Google, again, bounce point. You see how that works? So you have to see that conviction comes from multiple places. The better trader you get, the more you'll be able to thumb through and find this answers, just like I just did. And I had extra conviction that, well, these guys have earnings this week. Are we going to really break through monthly hedge pressure and collapse these stocks and earnings when the market is genuinely squeezing higher? The answer is we're probably going to support here. And this is also an illiquidity pocket in Google. As you see, that is why the market fell so rapidly. So it's not a function of bearishness, it's a function of illiquidity, right? So I say, oh, that's good condition. This is probably just volatility. You guys remember the video on illiquidity pockets, how markets just rush from one side to the other? You guys remember that, right? ED is Bay. I know. So just illiquid Google fell to support. And so I say, okay, it's a very strong case that the S&P is probably going to claw out right here. And of course, if Google starts breaking monthly hedge, then the market's going to collapse. If whatever else is on here, the bigger tech, because we have big tech earnings this week, so to make sure I keep an eyeball on that. So you see how I'm looking at the S&P, that I'm confirming it with, I'm making sure, NASDAQ, okay, yeah, NASDAQ has no real support. It's not easy to see right here, right? Let's see if there's any gap fills to the downside on NASDAQ. Let's double check this one. I think they'll actually already tap, yep. So keep an eye out. So it's not just what's the signal on SPY, what's the signal on SPY. You have, whenever the trade is, you always want to, you always be, you know, like I said, now poker players are always, you know, playing with their chips and moving around. You're always fidgeting. I'm always fidgeting by checking everything. Like if I'm in a trade, I'm always making sure everything looks good. I'm not just blindly looking at one thing. Like I have to say, okay, why does SPY sell off? And it's pretty easy to see that. So yeah, this is one of those things that we are at a random spot in the market. Now to break the tie, resilience is pushing down, DD is pushing up. So chances are I'm gonna work my way up to retrace a little bit of this. And this is just an illiquid spot in like Google, right? So that was easy to see that. You guys understand? So now I say, all right, where would I get out? Well, obviously right here, Google would be breaking monthly hedge pressure and the market will collapse if that happens. So obviously right about here, anywhere down in here, I'm not liking it. So I'm probably going to fully be out if we look at these right here. But then I also know that there's some risk on this trade. I'm only in 10 micros, not a lot. It's a pretty basic setup with a very low risk on the table. Now the confidence is low. Irrational hedge pressure breaks, etc. There's not a really big amount of bull steam, but the idea is, can I take a second trade to support at least this rule? And then the answer is, I feel confident here, but let's watch those stocks right that are right on the edge. So you go to the scanner, go to half gap breakdown right here. Boom. Volume. Amazon. Right? Did I stop Ed playing options? Do I still play options? Yes. Lately, no. Lately, I've been doing too much, and the futures challenge has been all my energy. 2 futures challenges. So I did these like trader funding things, and then I'm doing my 10K challenge to 100K. All of that's been my big focus. But I'll cycle back into an options challenge for sure at some point. Why trade 10 micros instead of 1 mini? Great question. For maneuverability. So this is something you should do. You should never let commissions dictate that choice. While on paper, it's cheaper to trade 1 mini, but 1 mini means I can't get in and get out of this position with granularity. So micros allows me to get into 1 mini position by manipulating my cost basis. So a rule of thumb is what your normal position size is. If you normally do 5 micros, 5 minis. It's a balance point. If I'm 5 minis, I'm going to do 10 to 20 of those as micros. I need to have some fine tuning, like to really fine tune my position. Yeah, I'm going to pay slightly more commission, but I don't care. I make so much money, it doesn't matter. Because I make more money with the ability to fine tune my position by getting in and get out of something. And then the rest will be minis. So like when I have my final entry, I'll load up on those minis really quick to save the commission, of course. But this being one of those, I don't know, funded account things, I want to have that granularity instead. And this is a paper account. I don't even know. Actually, I don't even remember. Do you guys do Elite Trader Funding? Are they tallying pseudo commissions in this? I can't remember if they do or not. That's a great question to see this. If they don't do commissions, then you should trade micros. All of it is micros, as a matter of fact. Trade 100 micros instead of 10 minis if there's no commission consideration. You always want to trade with as better denomination as you can. If you're trading within reason of like not affecting the market, like if I'm going to trade 10,000 micros, I'm clearly going to affect the liquidity. So I would not want to do that. But if I'm trading like 100 or 10 minis or less, and there's no commissions, micros would be the great way to go. The idea is to have the ability to add. I want to be in a position of one mini, but I want to get into it in stages. And that's why I do it like that. You thought you passed the funded for it. This is what's called this is the second step. So they call this elite account. It's a funded account. It's just not a live account. This is how this industry works. So this is how they pretty much like you have like a paper account that means something. They call the eval, passed. They give you a quote unquote funded account, just called elite, but it's really still paper trading. Like this is a funded account. Any profits I make, I keep up to a point. And after 45 days of payouts, they have another one called live elite. So they're both funded accounts. The difference between this is a funded account. This is a funded paper account. The last stage is a funded account with real money in it. They have different names of the way they do it, but at the end of the day, this is still a paper account that I get paid from. They actually pay out of their own pocket, I think is how it works. So you're getting paid to make paper gains, which again, that's how they all do it. I don't know. The reason they do that is that they require a couple steps to hand you real money. So that's how they do that. Pays out like a funded account just while you're just trading demo. Yep. Micros and minis are two separate instruments. They trade separately, but they track exactly the same. They sometimes track, like you said, it's the same mechanic. The answer is, for the most part, they trade pretty much the same. They pivot pretty much the same. The liquidity is different. So, like, while minis may like trade like this, the micro may like trade like that. It's not going to be like tick for tick. They're gonna be pretty on par for most liquid stuff. But anytime you have something that trades independently from something it tracks, it can deviate. You can see micros go down and minis go up slightly, but they're not really gonna, I don't ever see them not be like right on top of each other, because they're all priced the same way, similarly, but they do have their own liquidity, so they can have their own problems despite what the other ones are doing. So yes, two separate instruments, correct. You get charged commission still? Oh, thanks for letting me know. Here's that second test of hedge pressure. Let's hopefully we hold there. Which is more liquid? I would like to say that the minis are going to be more liquid. Now, don't confuse depth with liquidity. Liquidity is the availability of buyers and sellers. Market depth is the ability to resist buyers and sellers. So liquidity can't be seen on the ladder. I've seen so many traders make this mistake. They think that a thick ladder, like a thicker market, means it's more liquid. That couldn't be any further from the truth. This can be where people want to buy and sell, but liquidity is where buyers and sellers are finding each other and trading. So this is where people want to trade, but it's not where they are trading. So liquidity is the order that's hitting the bid and the order that's hitting the ask. So thicker bid and ask means more resistance to illiquidity, but it doesn't necessarily easily reflect liquidity. Liquidity is easily seen by volume. That's it. Higher volume, more liquid thing. That's where you look for it. So while the depth, I compare the depth and say that the depth of the micros is a little bit thicker, a little bit. But if you go look at the charts, you can plot ES versus MES, and you can see which one has more volume. More volume is more liquidity. So liquidity is buyers and sellers finding each other and trading. So you can see that the magnitude, the ES just has magnitudes more volume. Therefore, more trades are taking place despite the slightly thicker depth, and there's more trades. Makes it more liquid. There's more people willing to buy and sell somewhere. There's more people buying and selling somewhere. So it's a has more market depth and more volume at the same time. So the micros relatively are trading about 60-70% minute over minute of the same volume. So like example, the volume bounce we just have is 5,000 in mini and 6,200 and 5,000 in mini micro and 6,200 in mini. So mini is slightly more liquid, but if you hold depth the same, so the idea is if you hold depth the same, you compare the volume, and that's how it works. So like comparing like depth, like it's like 100 contracts on either side, 100 contracts on either side. And this is not the real depth either. This is rhythmic paper trading depth. So you got to put your real account up there. It's relatively the same on my real account. So with the depth being relatively the same, then you compare volume, and then that's how you find liquidity. You see that? Micros are primarily traded by retail traders. I wouldn't say that. I think micros are used to fine-tune hedging just the same way I'd use it. You guys want a sneak peek at the test server? All right, look at this, guys. Monthly maps, we're getting the shading in to show the zones. Next thing. You'll be able to show all options, or Monday, Wednesday, Friday options, or Friday only options. So you can clean up the SPY just to kind of zoom out. How do you guys like this? This is coming out tomorrow. Monthly maps version 2. We're making a bunch of versions of this. And you guys don't forget to submit your contest idea to me. We can get that going. Pretty cool, right? Yeah, baby. Looking good. So having monthly map options, which is good. I like that. Rise of volumes, there's fall and longer date options. Yeah. F2 is also correct about the bigger notional. So not only correct, the volume is not volume for volume. You would take per notional value, you would take the micro volume and divide by 10. So even tick for tick, the instrument is more liquid. It also has more money flow, as F2 was saying, because if you look at the notional value, even micros having less volume, it's magnitudes, it's 1/10 of the notional value. So you're actually, if you adjust that volume for notional value, it's really trading, I would say about 10% of the notional, or 10% of the notional value, even with tick for tick. The instruments are going up one at a time, but with slightly more volume in the ES, but the ES also represents more value, a lot more value. So it is the biggest flux of money of the two by magnitude of at least 10. So yeah, great conversation. But either way, it's neither here nor there. You're not going to see any difference trading one over the other as far as liquidity goes, because they're both being quoted by the same machine that's has the ability to quote both. You're going to very rarely see one trade farther than the other without some algorithm snapping those two back together. Some opportunistic arbitrage algorithm would easily trade that gap to close them out. So it's not gonna be easy to see deviations in the two anyways. And like I said, the only reason to do micros is to have granularity on your entry, to have the ability to maneuver your entry a little better, fine tune it. Oh, F2. See, there's a delay in the stream, so F2 just said what I said. Exactly right. That's 100%. So what you want to track when it comes to that, he's correct. You really just look at the minis. I don't care. I don't look at the micro chart. For sure. Difference in slippage. Oh, so that would be related to the depth, right? So do I notice a difference in slippage? Yeah, you will. At different times, you'll see difference in slippage. But in all honesty, you don't really experience slippage anymore. Like slippage, I remember, you know, we always pull out a trading book and they always talk about slippage, right? And that was before retail trading just became such a massive juggernaut of a thing. The markets are so liquid now, you don't actually experience slippage. Now, when you, like I say, if I buy right now the market, I'll buy to the ask, right? So I'm going to lose that tick, but that's not slippage. Slippage is when you put in an order and the ask adjusts, or you clear out tiers of the ask to get filled. It's like back in the day, you would submit like an order to buy 1,000 shares or something, you know, early 2000s, late 90s on those early trading platforms, and you would see some weird effects, like the ask would adjust and sell to you higher and stuff like that. That's what you see when you start to push through the bid and ask, or the bid and ask is manipulated to fill you differently. You're just going to get filled at the bid and ask these days, so you won't actually see any effects of slippage with an order typically of your size, of our size retails. If I go in and try to drop 1,000 contracts, I'll start seeing slippage in futures for sure. But on the magnitude of one mini here and there, you've got a buffer of 100 on either side of you. Unless your order's as big or bigger than the bid or ask, you likely won't be slipping at all. Right, throw it to the market. And so that's just my observation. But maybe others here have seen other different effects. Great question. So no, you won't really see much. You'll just see it. Sometimes micros might be thinner overnight, but in the daytime, they're both. You will get filled at the bid and ask when you push that market button, or somewhere in the middle. A lot of times you'll be filled somewhere in the middle if your order gets routed to like a liquidity provider. You'll see that your order is like, you got filled at 48.1142 or something. Some average fill. How do we trade directly from our platform? You can't yet, but we're getting futures going for Rocket Scooter. So we're going to have a futures DOM, just like you see on Tradeovate on my screen, but we're going to have our own ability to trade inside of it with your broker, whatever brokerage account we go with, and that's available. Is it compatible with majority of major brokers? It will be at some point, yes. So as our first iteration of the platform is all informational. Our second iteration of the platform is, we're going to partner with a futures broker. We're looking to do that, have futures trading at some junction. Then after that, stock trading, options trading with all major brokers. We're going to build APIs into just about anybody that has the ability to do so. So like TradeStation, you know, TD Ameritrade, Interactive Brokers. We'll be able to patch into a bunch of them. It's going to be like little by little. And also there's I actually have an idea to skip a bunch of steps there, which I might explore. I'll give you guys a little. Actually, no, I can't tell you. I can't see yet. There's a company out there that APIs and brokers, and I might try to get a production license from them to white label their service so that we can just get all those broker connections. The quickest way to do it, and we just pay them a fee for their service. We'll see. But ideally, if we can't get a quick enterprise solution, we'll just have to one by one open up broker connections. And the list of the ones we have are pretty good. They have the ability. We've already done our research on it. We already know which ones we can. We've got most of the majors you'll be able to get into. And TD Ameritrade doesn't give out API keys anymore. So they closed the door, but we got grandfathered in. So we can connect to TD Ameritrade when no one else will be able to. I actually have 3 API keys. So that's kind of nice. For TD. Well, not me, but like a combination of us and the company. Like so, Rocket Scooter. So we'll be able to develop in TD, even though the doors are closed on that. So if you got grandfathered in, you're lucky. Okay, so it goes there what minis and micros act in each trading or sell 90% what you're talking about from learning the program. I'm not familiar with those terms. Oh, so minis and micros are denominations of futures. In particular, index futures. The E-mini is what it is called for like S&P, NASDAQ, Russell. They call them the E-mini. That's just the name, the trademark name they gave to the tradable instruments. So you'll hear minis and micros, nanos. So there's a futures contract, there's a mini futures contract, there's a micro futures contract, there's a nano futures contract. It's like if the stock had like, if your dollar bill, you have a $10 bill, a $1 bill, a dime, and a penny. It's the same thing. It's denominations of currency, right? So you have denominations of futures. It represents a different amount of risk to allow traders to trade large amounts of S&P value at one gulp or tiny amounts at one gulp, and you have a lot of denominations in the middle. Nobody wants to have a pocket full of pennies when you needed just $1, right? It's just for that. That's what all those denominations really mean. Futures says slippage is minimal. Yeah, like I agree. My example was from anecdotal from my experience. My experience was I don't really notice slippage at the magnitude of amounts that I trade. Very little slippage. Oh yeah. Oh man, $300. Okay, so you gotta be very careful here because now I have to decide where we are. So my point of no return is if Amazon starts breaking through here, I'm probably done. So with earnings coming up this week, keep an eyeball on some of the major tech here. Amazon is looking good. Google is looking kind of meh. Yeah, F2 futures is right. Very rare will be a slightly bigger move on one or the other, but it's pretty much gone. Yeah, as soon as it's just so rapidly, a gap is always rapidly closed in. You'll never see them, like the futures will very rarely deviate from each other. Micro versus mini. The arbitrage is eliminated pretty much right away. Oh yeah, so it's just like the computers are bidding this instrument, so they very rapidly fill in any gap. There's like the arbitrage opportunity is probably hard to be detected because it's so rapidly closed out that the dealers themselves probably close that gap electronically, monitoring order flow, and then immediately just like if I saw a big order for mini that didn't come in micro, I would immediately go buy the micro before I filled the mini. Like the ability to the order flow routing through like a Citadel, that's what they would do. So they would, like you said, eliminate it right away by taking one trade before they filled the other. An example is if you saw the depth of the S&P and an order come through that moves it up 3 ticks, well, you would immediately go in and buy the equivalent position size in micros right away before it moved, and then you'd raise the price and then sell to the buyer and the mini that originally came through, and then you now connected the arbitrage, and then you had one mini went up, the micro went up first and the mini went up second, and now they're back in tandem, and you made money on both of the trades because you raised the price, well, or one of the trades, and the other trade you raised the price and shorted higher. And so that's likely what they do. The Citadels of the world close that gap before it even starts. That's what I think. What do you think, futures? F2? Like, it happens so quick. They see an order for mini come through, they go and trade the micro real quick and then fill the mini. Probably easiest way to do that. Because one's going to go up, they have to bring the other one up, so they need to quote them the same to make them track, and that's an easy profit. If a big micro order comes through, they go in and equivalently trade the other side of the minis to match the tick for tick change, because they're pegged to the S&P, so they're supposed to meet the tick for tick change of the S&P. So yeah, very rare there's slightly bigger move on one or the other. Yeah, and he is correct. I think that is what I noticed as well. What I talk about. Would you talk about data feeds, CQG versus Rhythmic? What market by order? Okay, so the data feeds between CQG and Rhythmic, they're both like in the same competitive space as far as what they provide. It's like an API data feed service that you can do they have lots of products depending on what you're trying to do, Ralph. What are you trying to do? Are you trying to develop with those data feeds to create like a software product? Are you trying to use those data feeds as a retail user in a paper account? Or are you trying to use their live trading features? Depends on what you're trying to achieve, Ralph. I don't have any personal experience with CQG or Rhythmic on the retail side, other than what I'm using right now with ETF, and I believe they use Rhythmic. All my expertise for those two come on the developer side, as I have familiarity with both of them on the development side. So maybe I can assist with any questions you have there, maybe off the stream. So looks like you're still hanging cool on Google. Looks like the market's trying to hold, but we'll see. The different platforms, other different options, but okay. Hold on. Hey, did I hear my name? All right, let's head over to Discord. I'm going to go play with these tests on the test server. Big release coming out. This is Rocket Scooter version 3.0. So we've been pushing through Major Epic 2 for the longest time. 3.0 is supposed to contain the real monthly. So this is monthly maps beta. 3.0 is monthly maps with all those features and a lot of other stuff. So I'm going to go play with that on the test server. Go in my approvals, see if we got it. And then that should be released tonight for tomorrow. A lot of big changes, and so 3.0 is prepping for our eventual. Well, I'm not gonna spoil the beans here, but Rocket Scooter has two business focuses, and the second one is about to come forward on the platform. So you guys see that pretty soon. All right, let's move over to let's head over to Discord. In about an hour, we'll hop on Zoom. Okay, we'll see you guys. Gonna hang on, still holding on to this. I like it. All right, mate, make sure. Turn the space down. Make sure you guys go over to our Discord. Check out the extended trial. The link is in the description below. We are giving a $35 a month for 3 months trial of our platform. It is pretty cool process. Yeah, you guys come here, learn something new for 3 whole months. You can actually go through the entire program multiple times for pennies on the dollar. You want to get everybody to check it out, see if you like it, come play around with it. Your data feeds are included with that. You'll get all the tools, liquidity map, DD resilience, all the risk management rules we teach, all the entire program. My Discord, Aston's Discord, we're all together in one giant collaborative environment. It's really cool. I want you guys to all check it out and tell us what you think. So come on over. What's the P&L right now for the 10K? It's right at the 60K mark. So made about 50-something thousand off of it. So that's where we are. I'm 40K away from 100. Oh yeah. Let's go.